All right, welcome back, ladies and gentlemen. We're back in the garden today and I have a very exciting breakthrough. I've been grinding away for the last 2 days, spending over 10 hours on TradingView, Google Sheets, backtesting, breaking down data, just to refine the strategy even more. And I have been able to almost double the expectancy of this strategy while allowing you to spend more time off the charts, just with a few small tweaks. So if you are familiar with my Virgin Wick theory or CCT by Cramson, you'll know that inverse fair value gaps are a big part of the entry criteria for the strategy. But here's a quick 5-second summary of the strategy. All right, so the strategy is essentially a break, a key level, a retest, and then continuation strategy. So a simple break, retest, continuation. So what we look to break is virgin wicks, which a virgin wick is essentially any wick that has not been touched since it has been created. So that's a virgin wick, that's a virgin wick. If you just draw a line to the right and nothing has touched it, that's a virgin wick. So we wait for a virgin wick to get closed through. In this case, a bullish candle closes through this virgin wick, which then creates your bullish point of interest at the level of that virgin wick. Then in the next hour, sorry, this all happens on the 1 hour. Then in the next hour, you drop down to the 1 minute time frame. You look for price to come below the point of interest and then create an inverse fair value gap. And confirmation of that inverse fair value gap is your signal to enter. And then you would ride that long up to your target, stop just below the inverse fair value gap. So that's the strategy in like 5 seconds. But what I did notice is that not all inverse fair value gaps are equal. And so I did a bunch of research, played around with a bunch of settings, did a bunch of testing, and yeah, it's actually quite incredible what just tweaking a few variables can do. So before I go over the new inverse fair value gap settings and variables, I know people want to see results, so I'll just quickly show what happened when I changed my inverse fair value gap settings a bit. Okay, so as you may have seen from the start of the video, this is what, whoa, okay. Yeah, so what I did was I backtested 4 months, so 2025, December, November, October, and September, once without using any inverse fair value gap settings, so just taking any inverse fair value gap that I see, as long as there was a point of interest, of course. But then I also redid those same 4 months with specific filtered inverse fair value gap settings. And yeah, almost a 10% increase in win rate and almost double the expectancy. So, and a nice bonus is you have less than half the trades. So that's like, what is that? 154 trades over 4 months, which is 40 trades a month. So like 2 trades a day, that's roughly 2 trades a day. Whereas if you don't use a filter, that's 366. So that's like more than double. So that's like 4 or 5 trades a day, I think. My quick math isn't that good right now. Anyways, but still, it's a lot less screen time and a better expectancy. And so this is what it looks like on the month-to-month comparison. So yeah, what I did was I would test December normally and then retest it using the strict inverse fair value gap settings. December was actually quite even, about the same. But then, yeah, November, it's 0.73 as opposed to 0.24. 58% win rate as opposed to 43. October as well, when it's stricter, almost a 10% increase in win rate, more than double expectancy. September, 10% increase win rate, almost double expectancy. So yeah, it's pretty clear to me that you don't want to just take every inverse fair value gap that you see, even if there is a virgin wick point of interest level created. you want to take the higher probability ones. And I'll just go over these settings now and exactly what I did to get these numbers. Oh, and so many of you guys are asking, like, where do I find the indicator, the inverse fair value gap indicator? Like, I put it in the description box every single time. You just click on the link. So you open up the video description box, click on the link, and it will bring you here. And then you can just click add to favorites here. And then you go into TradingView. All right, let me just go TradingView, 1 second. So once you've added it to your favorites, you go to TradingView. All right, so then you open TradingView, you go to indicators, and it'll be in your favorites, or you can just search for iFVG and it'll be right there. Click on it, add it to your chart. Very simple, very straightforward. Okay, so here's what I did. I opened up the settings. I'll just go over the settings one by one. So this historical look back, it just shows, this just determines how many bars to go back to look for fair value gaps. Not a major setting, it's just how many do you want to see on your chart at once. Daily bias, I just leave this on neutral because I don't use a bias currently for this strategy. I may be in the future, but for now, no. Wait, maybe I should get one on the chart just so you can see what it actually does, what the settings do, sorry. Okay. Where are we? Yeah. Okay. Yeah, this is just a cosmetic, however big you want it. I just put it on large so I can see it easier. Entry type. So what this means is, right now it's on closed. That means we want to see this fair value gap be closed through, so here, in order for it to be confirmed. Whereas if you put on wick, it would be confirmed here, or like as soon as you wick into it. But I like to put it on closed because that just makes sense for me. I don't bother with this because we have our own invalidation, so it doesn't really matter. Okay, this is a big one. Candles before inversion. Maximum number of candles allowed for an inversion to be valid. So ideally, you want an inversion to happen quickly, like you see here, like straight up, straight down, like a V shape. Think about V shape. The V shape recovery is always the strongest. So if you have this super high, you'll get a bunch of inverse fair value gaps, but they take really long to play out. I've traded iFVGs and studied them for a while, and the quickest ones are always the V-shaped ones. The higher probability ones are always the V-shaped ones, the quick ones. So yeah, 6 is a good amount. Even JMac, the guy who created this indicator, he puts them at 6, I'm pretty sure as well. Next important filter is choose whether to filter FVG. Okay, so I put this on ATR. This just chooses whether you want to filter by ticks or ATR. I just put on ATR. I've never tried ticks. But this is the important one, the minimum FVG size. So your inverse fair value gaps by this indicator will be filtered by this size. If you put it on 0, the indicator will show every fair value gap, regardless of how big or small it is. See? You see these small ones? Bang, bang. And the higher you put it, the more restrictive it will be. So it will only show bigger ones if you go higher. I've played around with it for a bit and I've found 0.15 to be the sweet spot. Big enough to filter out the really tiny small ones, but enough so you can still get plenty of decent setups. 0 for maximum, 0 for box extension, that's just a cosmetic. Profit targets, I don't use the inbuilt profit targets, I have my own profit targets, so that doesn't matter. And then, yeah, this is the next really important thing. Requires buy-side liquidity or sell-side liquidity sweep. So when you activate this, the inverse fair value gap indicator will require a sweep to start determining if there is a fair value gap present. Inverse fair value gap, sorry. And this is a huge filter. So if you notice, I'll just turn it off and we should get a bunch of just random iFVG. Yeah, see? Just like in the middle of nowhere, like that would have lost, that would have lost. Just a random one there. But when you turn it on, it filters out a bunch. And you get a lot of high probability ones. See, like that one, even just by itself. And how this works is, it's just a liquidity sweep. So, well, it's determined by this liquidity settings, okay? So I've got on automatic. You don't have to worry about this if you put on automatic. So if I'm on automatic, trading the 1 minute time frame, what it does is it will only print an iFVG if price sweeps a 15-minute high or low. So I'll actually turn on this, show the lines. I don't usually have this on, but I'll just turn it on so you guys can see. Bang. You now have these lines. So the indicator will only print a signal if you sweep a 15-minute high. So if you go to the 15-minute time frame, it's essentially just like these wicks. These wicks, wick, 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 wick. This wick, this wick, this wick. So the indicator will only signal if price sweeps above or below one of those highs. And yeah, it's kind of like if you know Dodgy's DD, a pretty big influencer on YouTube and Twitter. This is essentially his model. It's an inverse fair value gap followed by a higher time frame liquidity sweep. The only thing I'm doing is I'm combining it with CCT or ICC, and we are also adding an extra confluence of virgin wicks or POIs. So we're trading inverse fair value gaps with liquidity sweeps with a point of interest, making it super high probability. But yeah, this is huge, I've found. It really gives you higher probability trades when you sweep a higher time frame level before showing the signal. Yeah, I put on short term for structure mode. You can put on the others if you're more of like a swing trader, but I think for the 1 minute time frame and scalping, short term is good. I put sweep mode on both, extension type on short. If you put on current, it'll be too messy, but I don't have it on anyways, so it doesn't matter. I just turned it on to show you guys how it works. See these lines, these lines. So the signal will only print if you sweep a certain line, like a higher time frame liquidity line. But I'll turn it off because it's a bit messy. None of this stuff matters. None of that. I don't use any of that. Kill zone sessions. So you can turn this on so that the signal will only show iFVGs during certain times on the chart. I've just got these times because I'm doing a bunch of testing on different hours. But you could just set, if you only trade like, I don't know, Asia, let's say you only trade New York 8 to 10, then you just put it on 8 to 10 and you turn everything else off and you would only see iFVGs during that time. And also alerts would only alert you during that time if you do turn on alerts, which we'll get into. But yeah. And then this stuff, this is just cosmetics. It's just like colors, lines, transparency. I like green for bullish iFVGs, red for bearish, but you can make it whatever you want. Change the thickness, the line styles, colors, and all that. It's just cosmetics, nothing important. I don't use profit targets, I use my own profit targets. I don't use SMT, but I know some people use SMT pretty successfully, but I don't want to use it as an extra confluence. And then the alerts. So if you want to enable alerts for iFVGs, you need to tick these. And then you need to go here. Oh, it doesn't work in replay mode, but you would go 3 dots, add alert, and then you just add it. And it will take a snapshot of these settings and alert you during these times that you've enabled. So those are the settings that I've got and the filters that I'm using to significantly increase the win rate of this strategy. And yeah, we'll just go through a few examples of it in action. So I've already got one here. Let's go back to the start of this hour. Okay. So it looks like this 6 p.m. candle is closing bearishly through this virgin wick, therefore creating this bearish point of interest. So from 7 p.m., we can look for shorts if the POI gets engaged. So drop down to the 1 minute. Boom, POI gets engaged. Now just wait for the indicator to print an inverse fair value gap. Bang, there you go. So that would be your entry. Slight front run entry because we are not waiting for the close below the iFVG, but that is totally fine. Stop. So I like to put it just above the entry candle or the iFVG. But when the draw on liquidity is quite far away, that gives us a bit more breathing room. So I'll just increase it a tiny bit more. So we can still target the draw on liquidity, but give us a bit of breathing room on both sides. So 2R, nice and easy. There's your TP. And then so let's say I'm backtesting this. I would also track this in my sheet, which I'll just do an example of right now so you can see how I got these results. Okay, so then I would pull up my sheet and I would go, this is September, NQ, 7 p.m. Asia session, 7 p.m. candle. Oh yeah, that's another thing. I've been tracking my backtesting by hours. And some, pretty interesting results, which I'll go over later. Daily bias, something I'm still in the works, so I'm not really gonna focus on that now. POI wicked. That's something I'll talk about after this as well. But no, it was not wicked. What I mean by wicked is like sometimes price won't even close above the POI. And so for this example, it'll just wick it and then print an inverse fair value gap going down. And those are still valid, but it was something I was tracking. And then here I would go 2R, so it's a win. And then iFVG filter. 6 candles, 0.15 ATR, and a sweep. Oh, I need to change that. But yeah, you get the gist. I'll do one more just so we can see the new indicator at work. All right. What is this? All right, looks like there's a setup here. Let's go to 11 p.m. candle. Oh, I passed it. All right. Bang. Okay, so we get this 11 p.m. candle close through this Virgin Wick level, creating this bearish POI, and then from midnight, you would be able to look for shorts if the POI gets engaged. So let's have a look. Bang, POI gets engaged. Do we have an iFVG yet? Yes. Why is that not printing? Okay, maybe that's not a setup. I don't know why that was there. No, definitely not a setup. Actually, maybe, no, this is a good example. So I don't believe the signal was printed because this fair value gap is so small. And that's why it's nice to have this filter because, all right, let's see if this works. If I move this to 0, Yeah, exactly. See, that's why it's nice to have this filter, because if this was on 0, you could have seen this and be like, oh, there's an inverse fair value gap. We're above the POI. Looks like a good trade. But no, a fair value gap that small is actually quite insignificant. So really good example to show why we want to have this at 0.1. Yeah, 0.1 is the right, not 0.15. Yeah, beautiful. So you avoid that loss. Very nice. Okay. Let's do one more example. All right, looks like 4 a.m. There's one. So let's go to the 3 a.m. candle. All right, so get this decent close above this virgin wick, creating this bullish point of interest. So from 4 a.m., drop down to the 1 minute, look for this POI to get engaged, and then a long entry. Okay. So you get a confirmed iFVG here. So that would be your entry. Stop just below the iFVG, targeting this liquidity over here. The draw on liquidity is always very obvious. It's just like, look at the chart, where is like what point is sticking out? Like you get used to it after a while. And it should hit, yeah, there you go, bang. So I've already tracked this, but if I were to track it, let's go over here. September, NQ, what's this, London session, 4 a.m. Don't worry about bias. No, it was not wicked. Sorry, not 2R. What is it? 1.74. This is with the iFVG filter of 6, 0.1, and sweep. All right, one more example, just to show you how cool this new iFVG filter is. Let's go here. So we've got a pretty strong bearish candle here at 9 a.m., closing through this virgin wick, creating our bearish point of interest here. So then from 10 a.m., we can drop down to the 1 minute, look for the POI to get engaged, and then look for our entry. Okay, waiting, boom, POI gets engaged. Now just waiting for an inverse fair value gap. Boom, we get one within 4 or 5 candles. See, these are the nice ones that you want to see, that the indicator will show you. Nice V-shaped recoveries. Bang and bang, super quick. Yeah, so that would be your entry. Stop just above the entry candle or the iFVG, whichever is safer. So I'll go something like that. Bunch of liquidity down there, but of course we always cap our TP at 2R. Just like that. And very nice trade, almost 0 drawdown, straight to TP. So yeah, that's what the new iFVG entry model looks like, super clean. Feeling really good about it. I don't think I'm gonna mess with it anymore. I feel like I've been doing a bunch of refining recently, almost a bit too much. Like it's distracted me a lot. Like I haven't traded the last couple of days. And I feel like the model is changing a bit too rapidly. So for now, I'm just gonna stick with these settings for at least a few weeks, for at least like 20 trades. And then maybe I can play with other things from there. But I am sticking with these iFVG settings for now because I've got over hundreds of data to prove that it works now. I mean, yeah, just like, without a doubt, it just makes sense to use these iFVG settings. You'd almost double your expectancy, almost 10% increase in win rate, and less trades, less screen time. Like if I can spend less time trading, but also less mental capacity, mental strength, worrying about positions while making more money, I think it's a no-brainer. yeah, so that's it for the iFVG section. I also wanted to share something called wicking POIs. So wait, let me find an example first. 1 second. All right, so here's an example. So let's say we've got this 10 p.m. candle, strong close. It closes through this one and this one, creating your bullish points of interest, right? So then from 11 p.m., you'll drop down to the 1 minute and look for longs once the POI gets engaged. Once any POI gets engaged. Okay, so this one has been wicked but not closed through yet. Where is the entry? Sorry, 1 sec. Actually, that was a bad example. There was no trade there. Yeah, I'm struggling to find an example, but okay, let's just imagine that this POI is here, okay? So what I mean by wicking is POI gets created and price just touches it with the wick, or even the wick goes beyond it, but we don't get a close above the POI. So previously, when I first learned CCT, my understanding was that, okay, we got to get a close above that level, right? And then we look for an entry model back down. But yeah, what I've been testing is if we just wick that level and then we get an entry model back down, is that still valid? Just like that. And yeah, I'll just go back to the sheet. Yeah, here. So as you can see, most of the time we don't wick. Well, yeah, wicking is obviously quite rare. Most of the time we will get a close above the point of interest. But yeah, even in the times that we do just wick it, so there was 15 times, it's 7 wins, 8 losses, still positive expectancy, still positive result. So it is definitely still valid. So yeah, you don't necessarily have to wait for a close above or below the POI. You can just wick it. And if you see your entry model, then you can enter on the iFVG. Something else I want to share is the hourly candle stats that I found. So I started tracking things by the trades by which hour I entered on. And well, what you don't see here is I had 5 a.m., 6 a.m., 7 a.m., and 8 a.m. And they were all like close to 0 or some were even negative. And it made sense because that's like the dead zone between London and New York. There's no volume, no one trades it. So yeah, I got rid of those because they were definitely not profitable. But sorry if I'm blocking the view. But yeah, here's how the rest of the hours looked. Asia is definitely looking the best, as we always know in this channel. We've been tracking Asia. We've been liking Asia for a while. 7, 8, 9 p.m. looks good. 10 p.m. not so good, but 11 and midnight looking really good. London looks decent from 1 to 5, with 3 and 4 being especially good. And then, yeah, like I said, with New York, I was tracking 8 a.m. candles, but they were like 0 expectancy. Even 9 a.m. is not that good, 0.21 expectancy. 10 a.m. is a bit better with 0.41. So yeah, New York still positive, but not as good as London, and London not as good as Asia. But yeah, if I could only be active during like a 2-hour window, it would be 11 p.m. and midnight New York. They seem really good. So yeah, that's how we're looking. This is how gold and NQ is looking right now. Almost dead even between the two. So both are profitable. No one really takes the edge. Sessions, yeah, we already know Asia is king, London almost as good, and New York not as good. Nothing new there. And it's sneak peek, and something I'm working on is I was using T-Trade's method and his indicator of determining daily bias. I think I tracked almost 200 trades with it, but sorry, 300 trades. But not a significant difference. So when we do use the bias 0.48R, when we don't, 0.35. Slight increase, nothing crazy. Surprisingly, when there was no bias, so it was neutral bias, it had a really high win rate and expectancy. But yeah, nothing solid enough for me to really change my model. So I'm not using a bias as of yet. But I think I'll look a bit further into this and then make another video on bias. But so far, our main takeaway is just have a stricter iFVG entry criteria, and you can skyrocket your win rate. So that's where I'm at right now. Going to stick with this for a while and actually let it play out instead of trying to refine it more and more. The only thing I might change is a bias, but I still need to look further into that. All right, see you next time.